Good morning. Good Friday morning. It is June 4th. Friday, June 4th. Hope you guys are doing well. Good morning, good morning. Let me just. There we go. We're a few minutes early, so we'll let everybody else come in and join. How you guys doing today? Good? Good morning, Ronaldo. Justin. Good morning. Just looking at gold here. Dropped and now coming back. Some kind of news event this morning. I see some volatility today. What was it? Did we have any news event? Let's see. Oh, we had NFP, right? Was not. Let's see. Yeah, came in as negative. So non-farm payrolls previous 278. Consensus 650. Actual 559. Okay. 278. 650. 959. Okay. Worse than expected result, minus 91K. They thought it was going to be 650. Came under. But still a big increase, right? Why did they make the consensus so high? You're going to ask yourself that question. So let's see. Now what? The dollar is dropping? Yeah, of course it would be, right? Temporarily, likely, and then things are going to shoot back up again. This is because, you look at the data and it's negative, right? But you have to ask yourself, well, why do they put the expectations so high? It's like they know that the numbers are going to increase as the economy starts to open up again. They know it's going to increase. I mean, that's an increase. That's supposed to be a good sign. So why they put their estimates so high? So that if it falls below, even though it's higher, it's still considered to be a bad thing. I mean, there's just no level. There's no end to how this is manipulated. And what do we have here? Let's see. Let's take a look at the sentiment here. We were looking at Euro US dollar. They're bullish, so that means they're bearish the dollar. Alright, so we got that slight increase in price, and now it's really just dropping off of nothing. There's nothing here to support this drop from what I'm seeing. And we can even draw a trend line here. Let's fix that one. fix this here like that. So it's dropping on nothing, which tells me that we're not done with this increase in price. I mean, that's what I'm seeing. It's pretty clear to me that we're not done. Because if price drops from nothing, okay, we don't have any supply here, as you can see, and it's dropping. Why? NFP. So retail traders are shorting right now. Retail traders are shorting right now. And they're very happy because they're thinking, oh, finally I get it right. The data came out. It's considered to be negative, so I'll short. It's a beauty, you know. But you look at the charts, there's no institutional supply here causing this to drop. So this will likely be short term. And then we'll see a continuation, likely into next week. Yeah, that's what I see. So that briefly is causing the gold to rally. Yeah. But as we were talking about yesterday and last week as well, when we're examining gold, we have this situation here with price. And recently we broke out of this situation right here. Okay? So this is not completed yet, what was taking place here, or what's in the process of taking place. This is not completed yet. Like we were saying, you know, rally, drop, something like that is likely going to take place. Just from reading what we have here on the chart and what we see on the other markets leads us to suspect that what we'll see here is a drop in price, consolidation, and there's a number of different things that it can play out, but in different ways that it can play out. But this is one of those ways that are highly probable from what I'm seeing. So this rally here, this is nothing. This is really nothing. So we'll watch as the day unfolds. It's still early, 9 o'clock in the morning, Eastern Standard Time. Still early. And we could get this candle looking something like, you know, something like this. Okay. Next week we can get this, and we can look back and say, wow, yeah, didn't look like it at the time that that was going to take place. Didn't look like it at the time, but now, yeah, I see what was going on there. So just just be aware of that, because if I erase what I just drew, that looks very bullish. And based on the data that was just released, NFP, retail traders are loving this. They're like, wow, finally I get it right. But let me ask you something. Uh, with price being at these highs, right? We were hitting supply. Okay? So let's just go through this again together. Let me open up something and show you. Let me scroll down, 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 down. So, do you remember right here? Retail traders are long, right? At the highs of price. Retail traders were long at the high of price, right up here. So, do you think they want to continue price up at that stage, the banks, if retail traders are long? Probably not, right? Okay, so you have this very big drop in price. Who do you think was freaking out when price was dropping like that? It was likely the retail traders freaking out. Why? Well, because they just got in long. They were wrong for so long as price was rallying up. Finally, when price is at the highs, they're going to get in long. And exactly at the wrong time when price is contacting major institutional supply. So then price tips over and drops. And so they're probably getting out of some of their long positions. Who knows? Maybe starting to get into short positions. But now they're being lured into getting longs again. And this came just after a big drop in price. You see what's going on here? So just think about it logically. Why would the data be so conveniently set up? Okay, let's go back to the data. That was released. Now, I know it's very hard to believe that things could be manipulated to such an extent that, you know, the consensus would be 650 if they knew the numbers were going to be slightly less. Because, listen, they could have put this at 550, right? They could have put consensus at 550. Why wouldn't they? If they put it at 550, then this would have been above, and then we would have had a nice green indicator there. Nice color green that everybody likes to see for there to be bullishness. But if there was bullishness, if it was good, all right, let's go back here. Oh, no, that's not what I want. Dixie. Dixie. If it was good, it would have caused price to rally up, right? It would have caused price to rally up. Instead, it's dropping. So if they had plans to rally price up right now, would they not want to be buying? Right? So who are they going to be buying from? Who are the banks going to be buying from if they want to push price up? They need people to be selling, right? How do you cause people to sell? I don't know. Have the data come out and make it look negative? How do you make the data look negative when you've got an economy that's opening up and these numbers are obviously going to be higher? That's good news, right? Economy's opening up, non-farm payrolls, the numbers are higher. Isn't that good news? Yeah. So how do you make it bad news? Well, just say we're expecting 650 and then just make the number lower, and then that'll be bad news. Do you see how ridiculous this is? Do you see? Right? This could have been 550 easily, and this could have been a green. But if they don't want you to be buying, they're not going to do that. They're not going to have those numbers. And I know it seems like, oh, wait a minute, come on. You actually think people are working alongside each other, putting these numbers here to ensure that price. Look, it's not that I think it, I know it. All right? Do you know how I know it? Because when you pay attention to things like this, when you pay attention to what the banks are doing with price, and then you pay attention to how conveniently these numbers always seem to manage to help the banks in moving the markets in their directions almost every single time, okay? You get to a point where you can't deny something that's flat in your face. If you want to keep denying it, then that's just your own stupidity, all right? But it gets to a point where when you see it so often, you have to make mention of it. It's not a coincidence anymore, all right? It's not a coincidence anymore. And especially when you're looking at what the banks are doing, specifically what the banks are doing, and you're following along the storyline of what is expected. I mean, we just broke this down, right? This is one of the reasons why I wanted to do these live sessions with you guys every morning, so that we could go together and talk about what we're seeing on the charts, why we're seeing what we're seeing, and explain what we are believing will take place, or what we are expecting to take place based on the evidence that we have at the present time. And as price unfolds, more evidence will surface. Why? Because we are continuously watching the markets and watching to see what the institutions are doing with price. So I want to share this with you so you can see it, so that as the information comes out, as the data comes out, as the manipulation takes place, you can see with your own eyes what is taking place. Okay? Because it's one thing for me to tell you that it's happening. It's another thing for you to see it with your own eyes. And I'm telling you, you know, I have not sat down with an international banker, you know, head of HSBC or Citibank. I haven't sat down with them and asked them, "Are you guys doing this?" And then they said, "Yeah." I don't have that type of proof, but I mean, if you study things long enough and it's your expertise, you will start to notice a lot of coincidences. Okay, and I don't believe in coincidences. I believe in, what I see with my own eyes and what I can prove. And I've proven this to myself because, at the beginning I thought, oh, that's an interesting coincidence. Wow. They right at this moment, they really needed to sucker in more long traders for gold. Why? Because they wanted to push price lower. So they're going to sucker traders into to going long as they are taking the opposite trade. So, it gets to a point where you just start to see that this is the game. All right. So it leads us to suspect that this is going to happen, a drop in price. As the retail traders are getting excited right now and buying gold, okay, the banks are selling it to them. All right. Taking their long positions and transferring it to retail traders. All throughout here, the banks accumulate long positions. At the highs, they need to get rid of them. So who are they going to get rid of them to if there's nobody buying it from them? You think they're going to call the other banks and say, hey, can you do me a favor? We bought a ton load of longs on gold down in the 1700s. Would you do me a favor? We need to take some profits on those longs. Can you take them off my hands? They're going to say, who you think you're talking to? We're brothers, man. We're in this game together. We're playing the same game. I'm not going to take your long positions. I know what you've got planned. Price is going to end up dropping. I don't want your long positions. I got to take profits on my long positions. You want to take them from me? So, who do you think is taking those long positions from them? Obviously it's got to be other traders, right? At a large amount. There has to be a large amount of traders. So how do you get a large amount of traders to come in and buy? Well, you have 1,010 books out there that say how to trade NFP. All you got to do is sit by your computer, watch the NFP data, and if it comes out negative, then you get in and you short it. And if it comes out positive, then you get in and you go long. Oh, wow. That takes a real genius to come up with that method. It's just, if you think the market is so simple, you're gonna gravitate to very simple methodologies, and guess what? You're gonna have every penny taken out of your account. All right? And the reason why is because you are just applying such simple methodologies to something that is very complex. So, what do you expect? You think the big bankers who are trying to take every penny out of your account are going to let you make money consistently by very simple methodologies? Oh, all I have to do is go to a website and watch to see if the indicator turns red, red for short, green for go. Like, what are we, 5-year-olds? but the system treats you like you're a 5-year-old. You know, red that means short, green that means go long. Yay, buddy, you're a trader. Hope you make money today. I mean, come on, it doesn't work like that. This is just a little lighting system that is triggering your brain to make the wrong decision over and over and over again. So, yeah, I wouldn't be doing that. So, anyways, we see the move up. Beautiful. Whatever. My trading week is over. It's already over. I'm not trading. I'm already into positions. That's it. I'm done. I'm not wasting my time with these moves up and any of that stuff. I don't care about this. My trading is over, and now it's just about waiting for the data to come out later today and examining it and seeing what the banks were doing up until this candle here, this weekly candle here. So obviously they were rallying up, price was rallying up, pausing just before the drop. So we'll probably start to see some profit taking, okay? So let's take a quick look because now I got my juices flowing, and now I want to take a look at what they were up to last time. Let's see if we can see a little bit of the signs. Gold. All right. So on the last report, we were looking at the data. Here it is. The price was still rallying up right before the pause in price and the drop. And we see that they start to take profits on long positions. Small amount, but you can see that they were there, 290 to 288. They also closed their shorts quite dramatically from 91 to 73. Okay? Coloration of the cells, neutral, somewhat neutral. Okay. So we're not seeing much in terms of that, and I don't think the dollar made much of a move either. Yeah, they haven't done much with the dollar down at these lows. So they really haven't shown their cards yet. So this next set of data that's coming out today probably going to be a little bit more revealing about what they were doing up here. And it's probably going to show more longs being closed off. Likely. That's just my guess. I'm speculating here because I'm just trying to follow the storyline of what the banks are doing here with gold. And what I'm seeing is that you see the increase, right? In long positions. You see how they did that, right? Actually, right from back here, March. 254 to 288, all throughout here, 254 to 288, increasing along positions. So if you were going to retrace them down, retrace the price down, you would be taking profits on those long positions in preparation to add them back in and push price back up. So so that's what I'm seeing, and the more in line you are with reality, the more you'll see price play out to your expectations. It's quite incredible. It's quite incredible just how that works out constantly, consistently. So that slight push, yeah. So we'll see what happens. Yeah, I think this is just the beginning, luring retailers into getting long. They're buying the long positions from the banks, and then that's going to help facilitate the move. And then when it gets down here, like we were mentioning, then retail traders would be like, oh, I got it wrong, let me start shorting, and then that's when they'll start getting in long again. So sad, but that's how it works. Let me see your questions, if you got any questions. What's up, Jason? How you guys doing? Can I get some likes if you don't mind? How many likes do we have? I see on my side only 15. Are you serious? Only 15? What am I going to do? What am I going to do? What does a man got to do around here to get some likes? Jeez. Um, that's a good point, Kev. The consensus is highly unrealistic. The banks are too wicked smart. The banks are wicked smart. The banks are wicked smart. Listen, you're talking about billions and billions and billions of dollars. Okay? You're talking about a lot of money invested in these markets. A lot of money. So, big players, they're not going to invest a lot of money in the markets without knowing, you know, that their investments are going to pay off. It's just not going to happen. And I've seen it with my own eyes that they don't play games, right? They are in it to win. They are in it to take your money, and they use the same methods constantly because they're working. That's why they do it. Let's see. I thank you all for your information. You are a financial institution yourself. Ha ha ha. No, I don't think so. Not even close. Um, Assuming the same in US CAD, you're right. Damn, Kev. When you put it like that, I was a stupid trader. Green, go. Yeah, because it's not simple like that, right? Well, Jason, now you know different. Now you see different, and now you're a completely different trader than what you were before. Hi, Kevin, and everyone. Thank God for your school. I am now so wise. Yeah, now when you trade, it's a completely different ball game, right? Yeah, okay. So let's get into wanted to talk a little bit about the time frames and how to know the direction that price is going to move based on what's taking place on the time frames. All right? If you guys want to learn that and you haven't hit the like button, why don't you hit the like button and then we'll get into that. That's probably one of the most powerful things you can learn about trading is identifying what's taking place on each time frame and knowing what direction price will likely move in based on that. So instead of doing a chart that I've already worked out, why don't we do a brand new chart? Let's come up with a chart. What's a chart that has history? A chart that doesn't have price in all-time highs. Is everything in all-time highs? Probably, right? Amazon, what's Amazon up to? Let's just take a random chart and go break it down into exactly what's happening. Okay, let's see. Amazon, all-time high. Everything's all-time highs. Nothing, nothing, nothing. What else can we look at? Let's see. What's Netflix? Netflix. No, that's not it. What's Netflix? NTFLX? No. NTFX. I used to trade Netflix. Now I have no idea what the symbol is for it. NFLX. Netflix. There you go. Okay, let me see. Yeah, same stuff. Everything's all-time highs. Okay, so that's not really going to work for us. It's not really going to work. Bitcoin. What is Bitcoin doing? Yeah, dropping now after a nice little rally. Just enough to lure some more retail traders in case they thought, oh, the big rally is going to happen now. Let's say, let me look at a chart here. Twitter, you were saying? TWTR? All-time highs? Oh, that's an ugly chart. Twitter. Oof, ugly. Ugly. Okay. Well, I guess we can work with that. So let's do some analysis on Twitter. Okay? So we have this chart. Here we go. We have this chart. So the first thing I will point out is that we have an institutional area of demand right here. that price is responding to. Okay, so we got demand in play on Twitter. So that means, and this is a monthly chart. Okay, so that means the mid to long term direction of Twitter should be up. Okay, mid to long term. So midterm is multiple days slash weeks, and long term is weeks slash months. Okay, so over the midterm, meaning many days and many weeks, price should go up. And over the long term, many weeks slash many months, price should continue going higher. All right? That's just based on what I'm looking at here. Why? Because we have institutional supply and we have institutional demand. The banks buy, cause price to go up, and then when they stop buying, the momentum dies, and then price drops down. Where does it drop down to? It drops down to areas of demand where the banks are buying. What happens when price drops into areas of demand? They fill in more long positions and they cause price to go up. Where does price go up to? It will typically rally up into opposing areas of supply. Now, obviously on this chart, we don't have opposing areas of supply. So that causes a problem, because if we had, an area of supply on the chart from previous trading, okay, let's say, price was up here and then it came up here like this, then we would know that the direction of price would be like this. Okay, so because each candle is a month, we'd be looking at long term and very long term. Very long term is multiple months and years. That's what we mean when we're talking about very long term. So the move on Twitter would be very long term, months or years, and long term. Okay? Long term, many weeks, many months, and many months, many years until opposing supply. That's what we would be saying in a situation like this. Now, obviously, you can see that there is no supply here. All right? So the fact that there's no supply here, we don't know exactly where price is going. So we can't say very long term. Okay? We really can't say it, because there's no proof that price is going to go into any specific area of the chart. If there was supply, then that would basically be telling us that it's very likely price would be heading up there, but because there's no supply, we really don't know that. So mid to long term move up is what we are expecting. So that's just by looking at one chart, right? That's just by looking at one chart. Now we can go down to the weekly chart and take a look at what we see here. So let's go back in price, and let's just quickly look here. All right. So here we have an area of demand on the weekly chart. So not only is price sitting inside a monthly demand zone, it's also sitting inside a weekly demand zone. So you see the move up, okay? So once price came into this weekly area of demand, the forecast would be we are expecting price midterm and long term to be up. So midterm, many weeks, many months, or many days, many weeks, and long term, many weeks, many months. We just broke down this right here, for our members. This is extremely powerful, knowing this. Because if you know this, if you know what to expect over the short, mid, long, or very long term, if you know what to expect, the trading opportunities are there. One of the reasons why a lot of traders don't make money in the markets is because they don't know the direction that price is going to head into. And I know that sounds like, well, duh, right? But what I mean by that is a lot of times they'll look for their chart patterns, okay? They'll look for their double bottoms, they'll look for their, hitting support, hitting a Fibonacci level, whatever, support resistance. They'll look for those things, and then they'll look for certain candle patterns to be present on the chart. And then once those candle patterns are created, they'll trigger in a trade. The problem is they don't know if they're going in long, they don't know how far and how long price is going to rally for. That is the problem. They know it's going to rally, they have some idea it's going to rally, but they don't know how long that rally is going to hold for. That is the big issue. So they get in, it starts to rally, they get excited, but the second it starts to turn over on them, they start to get a little bit fearful, and they start to think, wow, I just made some good profits because I got into this trade. And instead of it going immediately against me, it actually is rallying in my favor. The last thing I want to do is give back these profits. So what do? So then their emotions kicked in, and they're not thinking clearly, and then they end up getting out of the trade. That is the problem with most traders that I've seen, okay, amongst many other problems. But that is one of the things when they get into a trade. So knowing what time frame price is involved with, I should say, because there are times where you're looking at a 4-hour chart and you shouldn't be looking at the 4-hour chart because it's not important. What's happening in the overall story of price, the 4-hour chart plays no role in it whatsoever. All right? So you have to know what chart is the main chart. Okay? You have multiple time frames: monthly, weekly, daily, 4-hour, 1 hour, 15-minute. So you have to know which time frame is the one that you should be focusing on. If you don't know which time frame to be focusing on, then you can't possibly know what type of trade you should be getting in. It's just not going to work out that way. So as you can see, knowing that price is in the weekly area of demand is important to know that you could get into a long position and hold for multiple weeks. Okay? And that's what happened here. Look, you get into a long position here, hold it for multiple weeks, and look, you see? This is what gives you the confidence to hold on to a position through the ups and downs. Because we can take it down to a daily and 4-hour chart and see what took place. So what I like to do is I like to always map out these zones so that we can see them on the lower time frames. So let's do that now, and I'll give you an example of how powerful this is. All right. So weekly demand, and then we do that, and we do this, and then let's just do that, and sync. Okay, boom. Okay, now we open up our daily chart. And here is where that weekly area of demand was. So price comes in here, and you enter into a long position. Or if you trade options, how many option strategies are there where you enter into these options, or you create the options, and the idea is you don't want price to go lower than 46. Okay? You don't want price to go 46 or lower. You need it to stay above 46 or even go in the opposite direction. You think having this knowledge is good? And knowing which option to get into. I used to trade options years ago, so I don't remember exactly the different option strategies, but I remember there's like iron condors, and there's all sorts of strategies that I learned. Very powerful strategies that you can get in if you know that price is not going to go below a certain amount, and you need it to go against that price and hold for a certain period of time. So there's a lot of different strategies that you can use to get into positions, knowing how long that position could be held as price moves into the opposite direction. So now price comes into the area of demand, and look, it holds for multiple weeks. So you see this push down here, you wouldn't be scared out of your long position. Why? Because you know the fact that price is hitting a monthly demand, right? Monthly demand. So what did I say? When price hits a monthly demand, midterm, days and weeks, price is going to go up. So multiple days, multiple weeks, price is going to go up. And long term, multiple weeks and multiple months, price is going to go up. So as you ride out through that first initial multiple days, multiple weeks move up, when you get that drop down, what keeps you holding on to this long position is knowing that for multiple weeks, multiple months, price is going to go up. So there could be a bigger drop, but over the longer term, price is going to continue going up. So knowing this is extremely, extremely valuable. So now we go over to the 4-hour chart. Okay. This is the 4-hour chart. This was price again coming into an area of demand on the weekly chart right here. Okay, those dotted lines. But I'll keep it just the dots so we can take a look. Now, so I'm looking at this chart really quickly. I'm going to do some analysis here and see if I can locate something. Let's see that. Okay, 4-hour. Okay, so on the 4-hour chart, price comes down into the area of demand. Big rally up. Who do you think was buying there? Who do you think was buying here? Who do you think is creating this? Price came down just about to enter into that area of institutional buying. So that's where the banks are buying. This is where the banks have the algorithm set up to start buying. Price was dropping, just about to hit that area, and then what happened is price closes, and then it opens down inside demand. Inside demand, causing price to go up. They exhaust price. It comes back down, back into the buying, and then it's a continuous move. So you see, if you were getting into a long position, many traders getting in long, let's say they were lucky, okay, and they managed to time this reversal, because what are we always taught? When you go to listen to professional traders, what are you always taught? That you can't time reversals. So don't even try. It's impossible. You can't, because you don't know where the market's going to return, right? Or reverse from. How many times have we heard that? 1,000,005 times? Well, I'm telling you that's not true. You can know. We do it all the time. So, and I'm showing you how you do it. This is an area of buying by the banks. So this is where I'd be buying. So is this rocket science to locate this reversal? Not really, right? Okay. So, but let's say, your average retail trader wouldn't be able to locate this area of buying. But let's say by chance they located this area of buying. If they were able to hold it until here, what do you think they'd start doing when this drop took place? It'd be very difficult to hold through that drop. You're looking at 55 down to 52. That's a big drop. You wouldn't have the courage to hold on to that long position unless you knew with certainty that over the midterm price was going to go up and over the long term price was going to go up. Then that gives you the confidence to hold the trade. And then if you did that, you reap the benefits, because now you're entering in long here and you're still holding price for a continued move higher. That's what you'd be doing, holding price. You wouldn't let these drops like this scare you out. Okay? You just continue to hold. And in fact, what you'd be doing is moving your stop loss from here to below here, and then waiting for new demand to be formed, and then once it starts going up and closing, you'd move demand below there. So you'd be reducing your risk as price plays out in your favor, and holding your position to build that position bigger and bigger. All right? So that in a nutshell is the power of, knowing what time frame to be focused on and how long to be holding your positions for. Let's take a look at some of your comments if you've got any comments. Let's see. Talking about trillions, yeah, the amount of money that's invested. It's like, there's different numbers: 5 trillion, 7 trillion, multiple trillions of dollars are traded in the market typically every day. Kevin, for the support, you are Kevin, for the support, you are a legend to the world. That's nice to say, Matthew. Multiple time frames are so important, and even multiple pair analysis. Yeah. Twitter, Tesla. How do you find demand and supply areas? Do you do it by the candle sizes? No. It's not that simple. Well, we teach exactly at our school how we locate the institutional areas of demand or supply. There's a very specific methodology that we go through to be able to locate the zones. And I've done some videos, I posted them on YouTube, but they don't go into detail because this is why we have a school. This is why we teach. This is why we have the lessons, because we go into great detail how to locate these zones. All the nuances. It takes a long time to learn it, but once you have the skill, you have the skill for life. And, if you don't want to be a supply and demand trader, I don't know why somebody wouldn't want to know how to trade, you know, a legitimate way that actually provides you an income and, can be able to allow you to know where price is going to go before it actually goes there. But if you don't want to be a supply and demand trader, just being able to locate supply and demand, and then you trade whatever style you trade, whatever way you trade, you're increasing your odds of winning. Do you take the candle wicks into consideration? Yes. In my analysis, I take everything into consideration. I take candle wicks into consideration. I take the length of the candles, the length of the bodies, where the bodies are located, where the candles are located, in what context they are formed in. I take everything into consideration when I do my analysis. Everything is important. Everything that happens on the chart is happening for a reason. It's just, do you know what that reason is? Most people don't. So that's why they resort to indicators, because they have no idea what to make of what they're seeing. So they want an indicator to tell them this is what they're seeing. And so, at the school we focus on what is happening on the charts and why. What does each candle mean? Why does it look like that? Why was it created? In that context, what we're looking at when we're looking at the story of price, why are those set of candles located within this context? And what does it mean? Because you could have the same candles being formed on different charts or different assets, and they mean different things. That's why looking and trading by candle patterns is not a good idea, because you're assuming that the candle patterns are all doing the same thing for every chart, which it's not. So you have to know the difference between what's happening on each chart. I mean, for me, that's just common sense. But if you don't even know that it could be that these candle patterns mean different things on different charts, if you don't know that that isn't even an option, then how would you know that you're supposed to, know that, right? That's the thing. You gave up on Forex a long time ago. Kevin brought me back, and I'm in love. Yeah, well, that's good to hear. Well, Forex is out of all the markets, I've traded a lot of markets: futures, options, stocks, and currencies. And I have to say, the easiest market to figure out is the currency market. In my opinion, it's the easiest market to figure out because there's a lot of money involved, and it's not so easily manipulated by smaller institutions. Stocks can be manipulated by one big player. I don't want the decision of one guy to change the market if I'm involved in that market. I want it to be a slow, concerted effort by a group of banks that take a long time to move price, and they have to do it in a very predictable way. I want to trade that market because then I can get into positions and I can, you know, make money alongside them. That's what I want. Why don't we make a Slack group for the school students? I'm a school student, but the website is complicated and lots of sections are not updated. Lots of sections. The website is complicated. What's so complicated about the website? I mean, everything is there. It's complicated maybe because you're not spending the time to really look at what we have. I mean, it's all there. It's not very complicated. You know what you need to know. The vast majority of students that sign up, they do what they're supposed to do. They come in here, they click on the learning process, and they watch the videos. That's the first thing they should do. But there's a lot of students too that they get very excited and they just want to be part of the school and they're like, I'm in. And then they immediately bypass all these key videos that they're supposed to be watching. And then I start getting emails. Where do I find this? Where's the homework? Doesn't make any sense. How am I supposed to know what the classes are? Where's the homework supposed to be located? Where do I send the homework? And it's like, it's all there. Everything's there. I don't know how much more I can present things. I don't know how much more I can put this information up here. You know, we're doing live classes every single week. Level 3 classes every single Friday. Now we're doing YouTube sessions every single morning. I mean, I don't know a guy who works harder to present and create content for members than me. All right, I'm working all the time. I'm working all the time. You know, you remember how long it takes me to make the Rougeau report every single weekend? I sacrifice my whole weekend to do the Rougeau report. Okay? Pretty much my whole weekend is sacrificed. So it's there. Why don't we make a Slack group? So now, on top, is Slack like something like Telegram? I guess it is something like Telegram. Right? A chat group. You know why I don't want chat rooms? Do you know why? Because then you're going to spend your whole day sitting in chat rooms talking to other traders that like to sit in chat rooms and talking about, what do you think? You think we should buy? What do you think? You think we should sell? What do you think? You think we should do this? You shouldn't be doing that. You should be watching the archived classes with your notebook and journaling. That's what you should be doing, not wasting your time in chat rooms. That's why I don't want a chat room. All right? Chat rooms are for people that don't want to do the work. They just want to sit in a chat room and they want to talk about trading opportunities instead of learning what they really should be learning, because you don't need to be talking to somebody about what trades you should be doing. The best students at our school are the ones that focus on working. They're in our school, they focus on working, they do the classes, they do the archived classes. I mean, we have a list of archived classes, like a massive list. I mean, you could be busy for the next 2 years. Okay? If you really wanted to be busy, you could be busy for the next 2 years going through the archived classes and journaling. And you know what? They're taking trades on their own. They're not, chatting with other people saying, hey, what do you think? Hey, what do you think? That's the worst thing you can do, honestly. That's the worst thing you can do as a trader, is be asking other people for their opinions. We're trying to make you self-sufficient here. We're trying to give you the skills at this school, the skills for you to be able to do this on your own. All right? I don't need to ask anybody for for my trading decisions. I do everything on my own. I don't need to ask anybody, and it's because I have the skills. I don't need to look at the news. I don't have to turn on the news. I don't have to ask Elon Musk what I should do. I don't have to ask any of the best traders, so-called best traders in the world, what they're doing. I don't need to do that. So, and trust me, you don't want to either. You don't want to. I know those who are, not at the level that they're supposed to be at. They think that that's what they need. But believe me, you don't need that. It's working against you. All right? It's working against you. You could take my word for it or don't. That's your decision. But as a successful trader who's consistently making money in the markets and who trades, professionally, who's been there, done that, who is not afraid to trade the markets, who doesn't really get triggered emotionally. Well, sometimes, but not very often. I don't blow up accounts. I consistently make money. I read the markets better than most traders can. Being a person that's here doing it, I'm telling you, the last thing I ever wanted as I was getting to this level was to be part of a chat room. And I was members of chat rooms in the past. And you know what I learned? Jack. During those times. I learned Jack. You know what I learned? I learned the opinions of 100 other people. And most of them were wrong. Almost all of them are wrong. And I heard, this guy, oh, look at this chart. It's moving. And then you go there and you look at that chart. Hey, look at this one. I'm looking at that. And then you go over there and you look at that. I mean, where's the focus? Where's the concentration? That's not how you win. You know how you win? By focusing, by learning, by journaling, by doing the work you don't think is associated with winning. That's what you do. You do the work that you don't think is associated with winning. And that's the key to success, the real key to success. Because most people think that to be successful, they have to just, like in trading. Oh, to be successful, all I got to do is go into a chat room and, chat with other traders that are apparently successful because they're in the chat room and they're like boasting about their trades and stuff. So I'll just go in these chat rooms with these other traders, and whenever they say they're doing something, I'm going to do it too. I'll never really understand why they're doing what they're doing. I'll never really understand why they're making the decisions that they are. Well, that doesn't matter because I have no respect for myself, and I don't want to learn the actual process I need to go through in my mind to be able to locate a trade. I don't think that's important. I think it's just important to hear what everybody else has to say and then maybe copy what they do. That mentality will make you a loser trader constantly, consistently. You want to be consistently losing? That's what you got to do. So chat rooms, I'm not interested in chat rooms. If you really love chat rooms that badly, then go find another service that has a chat room. That's what I recommend. But I'll tell you one thing, the reason why a lot of services have chat rooms is because whether they believe it's the right thing or not, they don't care. Okay? Because you are looking for it, they're going to give it to you. Even though they may know that looking for it is the wrong thing to do, they don't care. Because at the end of the day, they just want to sell subscriptions. That's all they care about, is selling subscriptions, okay? Because somebody who truly knows what it takes to be successful, they know chat rooms are not the answer, all right? So if they know it's not the answer and they know it's going to work against the student who's coming to you to learn, they should do the right thing and say, no, I'm not going to, give you something that is not going to work for you. Just like how we broke down the school in 3 levels. We broke down the school in 3 levels. I got students coming to me saying, hey, listen, I'm paying, I just want access to all 3 levels. And it's like, sorry, it doesn't work that way. Well, if you don't give me access to all 3 levels, then I'm going to cancel my membership. And it's like, well, then so long. Bye. All right? I have respect for myself. I have respect for the school. You're coming to me because you want to learn. And I'm telling you, this is the way. Don't come to me and start demanding what it is that you want, because I'm not going to fall for that. I'm not going to give in to that. In fact, anybody ever comes at me with that, I will be inclined to just cancel them and send their refund back to them before they even ask for it. There's a reason why we structure things the way we do. Because we're interested in making winning traders, period. That's our number one goal, is turning traders into winning traders. That's it. Okay? Not giving you everything you want. Sorry. Many times we're not going to give you what you want. We're going to give you what you need, but you're not going to realize it until down the road. But then later on you're going to come back and say, thank you. Thank you. I didn't realize it at the time, but you were right. Well, yeah, I know. Well, that's why we structured what we're doing the way that we structured it. All right? So, Mohammed, if you need help, email me. You know that where you can find the email. And I can help you. What is it you're looking for? You need help, some direction on where to go, then I will help you with that. Okay? I will direct you to what you need. And remember, when you go to the forum too, I'll give you a little thing, because some people have said, "Oh, I go to the forum, and the last thing that you put in the observation journal was like 2 years ago." No, you're looking at the top posts. That's not what you're supposed to do. You're supposed to look at the latest posts. And so let me give you some direction on that. Okay, so let's say you're looking at the observation journals for Aussie. Okay, and you want to, you're thinking about taking a trade on Aussie CAD. All right, you click here. You see here, Aussie CAD, recent activity 23 hours ago. You click on that, and it'll take you to the latest post. All right. Now, sometimes some time will pass before this observation is updated. Why? Because sometimes there's nothing happening on the charts of any importance. We're waiting for certain dynamics to come into play. We're waiting for certain things to happen. And until those things happen, nothing changes on that chart. Okay? And I know a lot of people, they're like, I want to be updated every day. Like, what is it doing now? What about now? Is it going to go up now? Is it going to drop now? I mean, that's a losing mentality. All right? And I'm trying to break you away from that. All right? I'm trying to restructure your brain so that it's actually focused on the things it needs to be focused on. I mean, that's why people come to the school. They want to learn the methodology. They want to learn the patience. They want to learn the type of thinking that they need to be winning. All right? So, if I don't see any reason to be updating a chart because nothing's changed on it, then I'm not going to be updating charts just for the sake of updating a chart. It doesn't make any sense. Just like you shouldn't be constantly looking at your charts trying to figure out what's the next little move that's going to happen if there's nothing significant happening on that chart. If there's something significant, I'll post it. Something significant happened. This is what it is. It created a new zone. It created a new trend line, or it broke a trend line. And now, you know, now the pressure's in to push price in a certain direction. Now the force of price is going to be pushing price up. So I'll post it when it's necessary. When it's not necessary, I won't post it because there's nothing to post. You just read the last post that I wrote, and you'll realize, oh, okay, we're kind of waiting for something big to happen. Nothing's happened, so there hasn't been a post. Okay? What I focus on is the important stuff. When it comes to the observation journals, when it comes to the classes, classroom sessions, the homework, every single week we're doing classes. And then, we're doing the level 3 sessions on Friday, so we're jam-packed with stuff, man. Jam-packed. Okay, so sure, we'll do if I need. Thanks, Kevin, no problem. Hearing other people is just noise. We don't need it. Exactly. Um, the basic level, or level 1, is the most important. It is the blueprint. Yeah. Kev, my favorite thing about the school is exactly that. It's just not about the money. No, it's not about the money. No, because if it was about the money, I'd be selling the same shit, garbage, as everybody else. You know, the chat rooms, the flashy titles, the flashy, hey, 3-month course, take this course and you'll be racking in the dough. Want to make $10,000 fast? Come and join. We'll teach you 10 G's. Come on. Buy that sports car. Yeah. It doesn't work. I could do that crap too, but you know what? I have morals. All right? I have certain standards that I need to upkeep as a human being. So I couldn't even dream of doing something like that. It doesn't it's not aligned with who I am as a human being. All right, anyways, we've been chatting for a solid hour. We went through what we are seeing. I think we pointed out some very, very important information. Now we just wait and see, okay? How it unfolds to see what we got right, what we got wrong. I'm pretty sure we're nailing this storyline and what's taking place. Pretty sure. I can't always be 100%, but I'm pretty sure I'm in the ballpark. And then next week when we rejoin, we'll look at what they did, we'll look at their positions, and we'll look at price action to see how it unfolds. Okay? So that is it. What time do you have your classes during the week, the live classes? So I'm going to be starting a level 3 session in a few minutes with a level 3 class, but they're going to be 10 o'clock in the morning Eastern Standard Time. And then they're recorded, and then they're updated onto the school website. They're uploaded onto the school website. So we have a whole library there. So even if you can't join live, we have the sessions there for you. You don't need to go live. You don't need. We have a section on the forum where you can post your questions. Hey Kev, I watched the last class and just curious about this area. Can you answer it in the next class? In the next class, I'll go look at your question and we'll address it. So you don't have to be there live. You, when you send me your homework, you can send in a request. Hey, do you mind checking out my homework? I'd really like to watch it later tonight when I get home from work and see what you thought about my work. That's how a lot of the students participate in the class. Okay? All right. Hit the like button one last time if you enjoyed today's session. I would appreciate it. And I'll